If you listen to the mainstream media news, the markets are headed for a meltdown. And is this correct, or is this absolute manipulation? If you stay to the end of this video, you'll understand what direction the markets are headed to in the next 24 hours, but more particularly why. We're going to look through the bullish case and bearish case scenario across the crypto market. Then we're going to dive deeper into why retail keeps on getting slaughtered by price movements. This is one you really need to know about. Let's run the numbers. Looking at total crypto market cap, we can see that on Friday we finished pretty much flat, Saturday just a little bit positive, and Sunday a little bit positive. Total crypto market cap is currently 2.73 trillion. Now what we need to do is to look at the markets from a structural perspective. We already know where the support and resistance levels are in advance. All we need to do is to look at intercorrelation and interconnection between charts. And what do we see with total crypto market cap? The bearish scenario, we come down to 2.71 trillion, maybe lose that and come down to 2.68 trillion. That would be around there on the fingerprint of your price action chart that you're putting money into. Now the bullish case is slightly different. We get above that 2.77 trillion and it could absolutely rocket. Don't forget, price is always moving in a wave around structure and between structure. Structure is vitally important to understand. Not surprisingly, when turning to Bitcoin throughout Friday finished basically flat, but there were some quite up and down movements. There was a lot of volatility on Friday. And when we look at Saturday, it came up slightly, and Sunday was pretty good for Bitcoin. Now let's have a look at things from a structural perspective, because we need to know in advance where the structural resistance levels are and where the structural support levels are and how fanned out they are. That's pretty important. When we look at Bitcoin is currently 85,037. If Bitcoin from a bullish stance gets above 85,728, we would expect some degree of consolidation around that 86,120 area. So what this is telling us is Bitcoin could come up, but the alts could explode. For a bullish case scenario. For a bearish case scenario, the 84,557 level is pretty important to keep your eye on, as is the 84,204. These are areas that we would anticipate Bitcoin's price reacting to. Remember, we can see the direction of future price action. If we lose the 84,204 level, there's structural support at 83,483 and down at 83,148. Knowing where the gaps are inside CTKS structure is a really valuable thing to know. Okay, let's look at Ethereum. Ethereum across Friday, pretty much flat, but we did have some quite good volatility inside that day. Saturday went largely positive and Sunday tended to flatten out. Ethereum is currently 1990, but let's look from a structural perspective. What we can see, there's structural overhead resistance at 1998 and structural support at 1990. The bullish case, we get above 1998 and start to party. There is literally no CTKS resistance above, no structural resistance above. So ETH, if Bitcoin takes off, could do incredibly well. We could see Ethereum tomorrow above 2100. For a bullish case scenario. What about the bearish case scenario? If we lose this 1990 level, there's structural support around that 1957 to 1962. If we lose that, there's an absolute whack of structure between 1936 and 1947. Always remember, price is moving in a wave in between structural resistance and structural support levels. This is always the play inside every single price chart. All you have to do is know where it is, and we know ahead of time. BNB, which measures exchange interest and exchange tokens. We saw on Friday BNB put in a rather large rally. that was retraced on Saturday. We've seen a retracement and bottoming out. We're starting to see a buy arc come in here on BNB. Of course, it's very short term. We need to look at the indicator to understand what's actually cooking inside structure. And we can see right here at BNB's current price, which is 623.20, there's overhead structural resistance. It is light, but it is there from 1623.60 to 624.50. Also, a more major area of structural resistance is at 632.90. So if we get above that 624.50, positive CTKS gap up to 632.90. And then there's very light structural overhead resistance at 636.80. From a bearish perspective, if we lose that 621.40, there's a lot of underneath structural support at 618 and 613. So these areas would be expected to hold BNB. On Friday, XRP traded up and then retraced, so it was quite negative on Friday. On Saturday, it came down. On Sunday, it started to flatten out. So we're in the potential of a bit of a buy arc here with XRP. But of course, it absolutely wildly depends on what Bitcoin does. If Bitcoin comes down, it's going to drag XRP down with it. But if Bitcoin goes up, it challenges those overhead structural resistances, XRP could actually do quite well. One thing to note, at that 242 level of XRP, which is currently trading just a little bit under 239, we can see that is a big area of structural overhead resistance that's been respected across the weekend. At least you know what's going on. For example, across the weekend, that 237.34 acted as quite a good area of structural support. For example, on Friday, when we lost this structural support at 242, we knew that we had structural support at 237. Looking at XRP's price currently, if we get above 242, it's a fresh air gap, it's a positive CTKS gap. Positive structural attraction up to higher levels north of 250 is possible. And when we look at XRP structure right now, it's just on a light level of structural support at 239. There's a lighter level below at 238 and a stronger level at 237. If we lose the 237, that would open up the 230 area. Please let me know, are you bullish or bearish on XRP at the current time? When you understand where the structure is, it's an absolute game changer. And of course, understanding intercorrelation and interconnection is wildly important. Let's have a look at Doge. We can see on Friday, Doge was about flat, just like total crypto market cap. On Saturday, Doge was flat, but we saw a slight increase in total crypto market cap and also Bitcoin on Saturday. And what do we see on Sunday? Doge came up. Now, we realistically need to look at the structure. A lot of people will seek to make buying and selling decisions without any structural awareness at all. If it's green, they'll buy. If it's red, they'll sell. So for example, if it's red, they sell. If it's green, they buy. We don't want to do things like that. We need to understand where the actual structure is. Doge is currently trading at 170 and 10. We have overhead structural resistance at 171.39 and 18, well, basically 18. So if we get above that 171, we really could take off. And this is a recurrent theme in the crypto market at the current time. We have lighter levels of resistance above and quite a bit of support below, something that you really want to keep your mind on. The retail market is absolutely scared to death at the current time. Now, how do I know that? Looking at the fear and greed inside the main market, the major markets in the US experience, at the current time, extreme fear. It's 23. Typically, when we experience extreme fear inside the market, it goes like this, and it tends to either flatten out just slightly or rebound to the upside. Notice that flattening out, rebounding, flattening out, flattening out here, rebounding. What are we seeing in the current fear and greed index? It's flattening out. What does this mean? Well, it typically means a kick up. Does that mean it's going to happen within the next 24 hours? Perhaps yes, perhaps no. What we do as professionals is we stack probabilities. When retail wants certainty, they don't understand that certainty is the absolute worst thing that you want. Certainty means it's going down. This is fear increasing. This is optimism increasing. By the time they're convinced, I'm talking about retail, by the time retail are convinced that everything is roses, they get slapped around, only to sell and only to see the price come back up again. That's why it sucks to be retail. Fear of the main market is something that we need to pay a lot of attention to because it directly impacts the fear inside the crypto market. And what are we seeing currently? Well, we're seeing currently that a degree of optimism is starting to enter the crypto market. We know that the markets were largely flat across the weekend, with a bit of a slight uptick. So what does this mean? It means that there's the potential for the markets to actually come up rather than go down. Remember, retail buys on color and professionals buy on structure. The other good thing to just keep in mind, it's a low impact week as far as economic data is concerned. Later in the week, around Thursday Australian time, we start to get some more key economic indicators coming out. But pretty much up until Wednesday, everything is looking relatively cool. This also means that the markets can take a bit of a breather. Intercorrelation and interconnection are vitally important, and we can see recently that net Fed liquidity has been coming up, and that's created some kicks inside the S&P 500, stock market optimism, Bitcoin, as well as bond market optimism. Don't forget, the nature of financial markets is to wave around, so we could get a dip, but we're looking at a recovery in process, at least a short-term one. Let's look a little bit deeper. On Friday, we saw ADA Cardano actually just weaken. It weakened again on Saturday, and it weakened again on Sunday. Are there any structural reasons for this weakening? Well, let's pop on the service indicator. Okay, there you go. There is the reason. Because we couldn't get past this massive sell wall at 72.14. That brought the sellers into the market and they pushed ADA down and down and down. ADA is currently 70.20 at the time of this recording. A bullish case would have us fill this positive CTKS gap all the way up to 71.65, and then we would expect a bit of wobbling around that 72.14. For bearish case momentum, we have support at that 70 cent mark, the 69.62 and the 68.91. The powerful thing about the CTKS method, which is literally the world's most powerful smart money buy and sell level detection system, is that we know where the structure is inside the market, how fanned out it is, how strong it is, and how strong it is actually makes a huge difference on where a specific chart can go. When people first enter markets, they typically guess and they go on their gut instinct. And both are terribly wrong to do. If you're not getting past an area of overhead structural resistance, it means you've got negative structural attraction to areas below, and you must bear this in mind. Looking at Mike Tyson's favorite crypto, Solana, what we can see on Friday, it was basically flat, and we saw that just playing out right across the board. Saturday was positive, Sunday was positive. And we can see we're basically trading at a level around that 130 mark. But we need to understand what structure is doing. Oh boy. It's an unfortunate thing. Solana is going to have a little bit more trouble going up through these structural overhead resistance levels. But it has been relatively strong compared to other cryptos recently. So the bullish case side here is there's quite a bit of overhead structural resistance, kind of like Bitcoin. But if you look down, we can see that there is structural support fanning out at these areas. To see if things are improving or decaying, it's not a bad idea to look at our bit of a noodle, the CTKS noodle. This assessment gives us an understanding of how Bitcoin is moving. And we can see that Bonk has been doing pretty well, followed by SHIB, Solana, Doge, and then Bitcoin. Lower bank with Pepe, BNB, and ADA. One thing to understand, if Bitcoin turns around from this point onwards, and that is possible because of our stack probabilities. We haven't looked at the main markets yet, but we need to do so. But if Bitcoin continues to come up, the bullish case will play out on all of these charts. If Bitcoin decays down, undersides retests, and resumes down, the bearish case will play out. You must stack probabilities and move away from the retail mindset. It's 100% that this thing is going up or down. That is just absolute rubbish because price is always moving in a wave. You see it inside the charts every second, literally. Ditch retail sentiment, ditch that certainty. Certainty means you're entering at the wrong time. Retail sentiment is absolutely shocking inside the stock market and across the crypto market. But when there's extreme fear, we need to be thinking about dollar cost averaging and buying. Every investor says, I want to buy low, but when the low comes, they don't want to buy. Because they're actually not investors, they're emotional traders. It's useful to consider that all investors become traders anytime they buy or sell. And what typically happens, emotional trading, aka retail investing, is where it goes green and people pile in only to see it go exactly the opposite direction. And when it goes red, people pile out and they see it go in the opposite direction. This is why you must stop being emotional with your buys and your sells. This is more easily said than done because there's one thing that just messes everybody up. Everybody wants to buy at the bottom. This is the greatest curse. Now, why do they want to buy at the bottom? They want to buy at the bottom thanks to Warren Buffett and many people like him. Hey, Ken, don't pick on Warren. Okay, I'll just say what Warren said, and Benjamin Graham and all those greats. They say, don't lose money in the market. If the market is coming down, what are you doing? You're losing money in the market. Didn't Warren Buffett say that the 3 golden rules of investing are don't lose money, and don't lose money? Come on, Warren, you already know the price is always moving in a wave. Of course there are going to be losses, and Berkshire Hathaway has had plenty of them, but it's done incredibly well. Warren is the consummate investor, but he's not retail. So if you combine a couple of things, sell at the top, buy at the bottom, don't lose money, that's the 3 pillars of retail portfolio destruction. Okay, so how do you get around just being destroyed by the market financially? First of all, you have to understand what retail does. The first thing to understand, when people get into financial markets, they're generally very successful people. They're not your average run-of-the-mill people. They're generally people with money or people who are really smart and intelligent. The problem is that they buy into the retail BS that so many influencers shill out there. And what are these people shilling? They're saying you can have 100% return with 0% loss. They make one-way decisions, and these one-way decisions are based on certainty. The certainty is that the different influencers will tell you it must go up, the bottom is in, all of that kind of rubbish. And why is it rubbish? Well, it's rubbish for the very same fact that price is always moving in a wave. What bottom? That one? That one? That one? What bottom are you talking about? Don't think about these things like that, just think about structure. So when people first get in, they don't know what they're doing, they're panicking. They're obeying Warren Buffett's rules, the best investor in the world, and saying, don't lose money, buy at the bottom, sell at the top. Oh my God. By the time they have certainty that the price is coming down, they capitulate and sell at the bottom. By the time price comes up and up and up, they have certainty they buy at the top just before it retraces. If you can relate to this, please let me know in the comments. The key is, it's not your fault. The big end of town is manipulating your emotions, so you need to become emotionless. Now, what happens? People panic and then they start to get angry. They get angry because they're losing money consistently all the time. They're making the wrong decision all the time. It's like when I taught first and second year statistics. When people, my students, had particular problems with different areas of subject material, as soon as they got it, as soon as the penny dropped, things clicked into place, they didn't have that problem anymore. And it's the same inside financial markets. As soon as you figure out you're the only one that buys and sells, you're the only one that can press the button and make the decision. You don't blame anyone, including yourself. You don't do that, you learn. And if you learn, you start to create rules. And you know that certainty is just a retail trap, so you look to stack probabilities. In doing so, you move out of Zone 1 and Zone 2, where the lose money rules apply. You start to make money, but to keep money, you must think differently as well. Retail is simply trapped inside Zone 1 and Zone 2, and they don't even know it. One of the greatest skills that you'll ever learn to read is structure, and structure is always drawn support and resistance levels across all of price history. When we look at the S&P 500, we can see all of this like random chaotic action. Look how chaotic it is. But is it chaotic? No, it's not. It's not chaotic at all. What you can actually see is when we got over this overhead structural resistance way back on last Friday at 56.04, we did a real rally up to around that 5700 area. But as we lost this structural support at 56.727, or 56.72, what that did was create negative structural attraction down to the structural support levels, and we knew these ahead of time. Because they were so strong, they rebounded price up, and we didn't get above. We tried, but we just couldn't hold it. And when you can't hold a level, you get negative structural attraction immediately to the lower structural levels. They can take a little bit of time to play out, but that's how you read it. If it fails, you got negative structural attraction at that point of time down to the lower structural levels. If it gets above and passes, you have positive structural attraction to the levels above. So what does it mean for the SPX, the S&P 500? If we get above 56.72, it's looking really good, because we may find that we have this upward price momentum. And just always remember that the markets are so fearful at the moment. Pretty much all of retail that could sell has already sold. Also remember that all markets are intercorrelated and interconnected. When we look at the Bitcoin ETFs, look at these positive flows in over the past 5 days. They're not happening for no reason, and they're happening when all of retail is scared to death. Therefore, for the next 24 hours, the probability is that markets will actually come up. Don't forget, just on Friday, the price was moving in a wave, even though it was flat. So if we have upward price momentum, that doesn't mean up only. It can mean up and down. The first key to breaking out of retail is to just understand the rule, price moves in waves. That's rule 4. This is just an amazing rule because it helps you to understand, just like the ocean, prices are always moving up and down, up and down. And this is an NFT, and you can get it from OpenSea. Haha, Very interesting. OpenSea and Waves. Have a great day or night ahead, my friends, and please let me know in the comments, where do you think the markets are headed to in the next 24 hours? Bye for now from Ken and Kate.